Hi folks, welcome to the video. Do read the disclaimer. Today we're going to talk about bear markets and how bear markets are the price of bull runs. What do I mean by that? Let's take a analogy. So you can see a farmer here, and when the monsoon comes, the rain floods the fields and creates challenges for the farmer. Yet the same water nourishes the soil and it prepares for the harvest. So if there was no monsoon, if there was no storm, the farmer cannot enjoy the crop. And the markets also work in the same way, where unless we recharge during the bear phase, we cannot enjoy the bull phase. So bear markets, although they feel unbearable, and they set the stage for the next bull run. So we're going to see some statistics about bear markets today, India as well as overseas markets, and how long does the pain of these bear markets last. So the average duration of a bear phase in the last 20 odd years has been about 21 months for India. And when we compare it to other markets, we find that only Japan and China has had significantly different or larger bear phases. Otherwise, US, UK, Germany, Brazil, they've had shorter bear phases versus India. Bear market is typically defined as a 20% fall from the peak, and that is uh, called the bear market. Although a 15% fall is no less painful than a 20% fall. And these are times of widespread pessimism, where because this is also happening because people are viewing the market as a timing game, that we should come in and from the day we enter we should make a gain, and from the day we exit the market should fall. That is the 99% of people who come to the market come with that psychology, that when I enter the market should start to rise, and when I exit the market should fall. And that doesn't happen. Markets are no slaves to your thoughts. And you know this pessimism that comes around is because the expectation was that when you invested, market should go up. So if the expectation is changed, that a bear market is part and parcel of a full cycle, and you will have to go through it unless you are a great timer of the market, which 0.001% probably people are not. So this causes basically pessimism, throwing away of your positions, and not spending time in the markets. So let's take some real example. So from 2005 to 2025, we've had four sort of bear market phases. First, of course, was the GFC crisis, where markets dropped from 6,000 Nifty till almost 2,200 Nifty. That was phase one. And then there was a long sideways phase where a lot of corruption scandals came out, and so on and so forth. And there was basically markets didn't go anywhere for a long period of time. And then you had 2015-16, where Fed hiked rates first time in 9 years, and there was a reasonably global sort of a bear phase at that point. And fourth was recently, not so recently, actually more than 5.5 years back, was COVID. And we are currently also now tending to go into one as phase five. So currently, we are sort of in a consolidation position where we are only 6% down from all-time high, but we were, very recently down even more. And the fact is that we bounced from a support level. There is a chance that we go back and retest that, or there is a chance that we keep consolidating in this phase. So if we were to put all this data together of the last 20 years, we find that the percentage of time the market has been in a bear market is 33.9%. So about one third of the time the market spends in a bear market. 18.2% times is the period where you are having a bull run, and 48% times you are in consolidation. So almost 79%, or sorry, 81%, 81.8% of the time you are not really making money of any consequence. And it's only 18.2% of the time where really the momentum and the bull markets really take off in a big way. So where do we stand versus global markets? We can also see this. So Nifty, we've already seen 33% bear markets. Hang Seng has had a 69% of the time in bear market. Just imagine the poor souls what they are going through. Uh, Almost two-thirds of the time they've spent in bear markets in the last 20 years. Nikkei also 30%. Brazil, Germany, US, UK uh, doing better at 15%. The time in bull run is somewhat similar with Nikkei and Bovespa. Hang Seng has only spent less than 10% in bull runs, and Germany, US, and UK they have spent a good time 27%, 33%. UK not as much, but these have been the key markets in the last 20 years where significant part of the time has been spent in bull runs. And if we see the consolidation time, then UK has consolidated for 71% of the time, most others near the 50% mark, and Hang Seng only 21.4%. So Nifty is not very far off from others when it comes to time in consolidation, is sort of in the middle ground when it comes to time in bull run, and just lower than Hang Seng in terms of time in bear market. But from others comparative, Nifty has been one of the more turbulent markets with multiple bear phases, and which often last longer than those in the other market. Now the question is a longer bear phase necessarily a bad thing? You would imagine that markets that go into long bear phases are not worthy of your investment. But surprise, surprise, when we compare even in dollar terms across all markets, Nifty has done the best at 482%. So Nifty in dollar terms in the last 20 years has performed at 482%. US is at 429%. Germany in dollar terms is at 370%. Brazil is at 159%. Nikkei is at 153%. Hang Seng is 77% only. And there is one more. So essentially, what we can say out of this is that despite having longer bear markets, despite having longer consolidation, Nifty catches up very, very fast and is able to perform better than other markets, better than its peers. Uh, Also because we are the one of the fastest growing markets. While China has been a fastest growing market for last 20 years, the stock market has not performed according to that kind of a growth. So there is always some kind of event which will disturb the market, cause volatility in the market, and make sure that most of the people will move out of the market because of those events. Because when you are down 10%, 20%, 30%, it feels it is the end of the world. You've lost so much money. This market is never going to come back. Your strategy is not good. uh, you lost the chance of your lifetime if you didn't invest near COVID. All those feelings will come and overwhelm your mind, and you will basically say, okay, let me go to the bank and create an FD, or let me just put some money in the mutual fund, or things of that kind, which will basically rob you of either inflation or making some decent money on the gains. So a lot of ships get stopped. People exit from their positions. People exit the markets, getting fed up of 1 year or 2 years of non-performance, and show they will come to Twitter and show that see, 1 year Nifty is so bad, and just look at other asset classes. But everything has a cycle, and this understanding of this cycle, that the bear market is the night before which day comes. If you are expecting that it should be 24 by 7 sunshine, then it happens for some time in northern Europe, but nowhere else. Uh, and and uh, and and to really accept the fact that this is a cycle, and you have to go through that cycle, and the number of cycles that you have seen in the past prove it more than once, that if you will stay through, and if you have a strategy to stay through, you will come out to be a winner at the other end. So all this turbulence is basically noise. And if we see last 40 years of chart, let's say this is a Sensex chart, and if we see the number of incidents and the number of events that have happened, whether it is Mumbai train bombings, whether it is Lehman crash, whether it is taper tantrum, whether it is demonetization, whether it is COVID, whether it is Indo-Pak wars, whether it is Hamas-Israel conflict, and so many others. What is the market doing? Ultimately, it comes back and catches on to the growth path that India is on. That is not stopping. That is not stopping. That it will take a lot of undoing of the structure that we have in India to really stop that growth. I don't think it is possible to stop it until much later, where it becomes like a mature economy. So Indians are extremely entrepreneurial. Indians are growth oriented. Indians are very dynamic in terms of business. I don't think you can stop this market. So this path in the back of your mind should be clear, that there is no going down. There will be blips on the way, but there is no going away from this path. So, conclusion: accepting market reality, market fall is a part of the process. Consider it as part and parcel of the deal. Risk and return come hand in hand. The enemy is not the volatility; it is our own instincts. Volatility is nature of the markets. We have to accept that nature and play along. Uh, Frame the challenge not as beating the market, but as beating your own counterproductive emotional reactions. Okay. Second conclusion is winning the mental game. So now that you have decided to stay on, how do you play the game? So again, you will need to define a process, follow some strategy, do something which will override your emotions. Because if you are going to be susceptible to your emotions, you will certainly make the wrong moves when the time is critical. And of course, patience, maintaining a long term horizon, is the antidote to recency bias. So, all this noise that you have heard in the last, let's say, 1 year, September 24 is when the market started to stop going up. And we are now in September. In last 1 year, there's so much of hope that is being given up. But just look what happened in the previous 4 years. Even after this 1 year of nothingness, the 5 year data looks much higher than the long term average. So market is basically reverting to the mean. It is taking its time. It is sort of booting itself. You have to give it that time. And once it starts to go again, I mean, there is no stopping. So let us know in the comments, what is your plan when the next bear market comes. We are currently in consolidation. I'm hoping we don't get into a bear market. But if you like this video, you may like this other video also on your screen. Do watch it. Do subscribe to our channel. Do give us a like if you like the content. Do share it with your friend. It may help him or her. Thank you. Bye.